Hi, I'm Kami Dar. I am CEO of Unity Networks and your moderator. It's a real privilege to have the two of you here together, Fay and Cathy, and to moderate this session. Neither of you needs much of an introduction, so in the interest of time, I will skip that. But thank you for everyone who's joining the session. I do want to say, if you don't know who these two women are, you're absolutely missing out on two of the more exciting thinkers and agitators in disruptive finance, investment, and in technology. So welcome to you both.
Thank you. Very happy to be here.
So, this is very much a meeting of the minds and lets us explore the intersection of your two worlds. So that's disruption, that's technology, that's finance and innovation, with a focus on making a better future. So I kind of want to start at the end here and ask you each just to sum up, what does a better world look like from the lens through which you are looking at the future? Let's start with you, Cathy.
Oh, a better world. Well, innovation solves problems. And we learned last year during the coronavirus crisis how many problems we have, how many problems needed to be solved. And we saw innovation come through in a very big way, whether, in the design of the vaccine in a record-breaking time, or the digital workspace and the digital home. So I think what I'm most excited about is the 5 innovation platforms around which we have centered all of our research. So DNA sequencing and the convergence between DNA sequencing, between and among DNA sequencing and artificial intelligence and CRISPR gene editing and other gene therapies. We're going to cure disease. That's very exciting. We're going to understand how the body sets up to move into a disease state. That's very exciting. Robotics is going to create jobs. We just cannot imagine today what those are, and they're going to be much higher value add jobs. Energy storage is going to help move us into a much better environment, and I mean that literally. The environmental impact of battery technology is going to be pretty profound as autonomous electric vehicles scale throughout the globe during the next 5 years. Artificial intelligence training costs are dropping 68% per year. And we're finding out that as long as the human being sets the objective and the reward system, when it comes to artificial intelligence, machines can get there better and faster than human beings. And finally, blockchain technology is going to be completely disruptive to the financial industry, not just the financial industry. It's going to be taking middlemen out of the equation and increasing the productivity and efficiency of the global economy. So we're pretty excited about the productivity uplift that we're going to see during the next 5 to 10 years. It's going to be unlike anything we've ever seen or experienced ever before.
Yeah, I like that. I think focusing on solutions, on problem solving, and the human potential to see and to react, but also react at the pace that we are changing at, is hugely important. Fay, what about you? What do you think about a better future? What does it look like?
I think a sustainable digital economy that is not monopolized by a single entity or any single entity, right? I think the better future is, as Cathy said, there's an influx of trends are coming together. And up until before COVID-19, when you would talk about digital transformation, people say, why? But when COVID happened, everybody want to be digital without asking the why. Right, and at the same time, with AI, smart mobility, blockchain, and generally speaking, with decentralization and everything going digital, what we see is that it's going to be difficult to kind of go vertical and look at the world as a vertical silo applications. But very soon, you're going to see that this convergence means that things will communicate with each other. And what we saw also over the past, especially few months, is that data exploitation is an issue. So we need a better business model than the business model that basically talks about how do I take users' data and monetize data without having user as a data producer in their investment into this digital ecosystem, taking anything in return. So we're very excited. We're definitely excited. We've been preparing for this moment in terms of how we saw that the convergence of technologies is going to happen. And it's and I hope to see what we're working toward is to build a more sustainable digital ecosystem. Kami?
Yeah, so many themes to pick up on there. Thank you, Fay. So, and it feels like we might need more than 30 minutes to dig into everything that was just said. But let me start with this idea of monopoly and the role, the relationship between decentralization and monopoly. Cathie, you talk a lot about this, about exponential curves and the convergence of these 5 technologies and the moment. What do we do with this moment? How do we leverage this moment? How do you see the role of sort of governance in managing the potential monopolies around this growth? You talk about maybe a winner takes most economy. What is the relationship between government governance and the growth of these companies and the exponential growth powered by AI and these other trends?
Well, one of the things I'd like to add to our last answer, and playing off what Fay said, is that people and businesses do not like change. There's a lot of inertia, but when they're scared, they automatically change their behavior to something better, cheaper, faster, more creative, more productive, and that is what we saw. Now, in terms of the idea of winner take most, we are grappling with that today, of course, with the Facebook and Google and others in their respective markets. I have found over the years, and I've been around the block quite a number of times, I've found that government intervention usually is futile. The first example of that was AT&T, the almighty U.S. telecommunications company, was broken up into 8 baby bells. And then the technology started changing so rapidly that they all had to consolidate and come back together again to survive. So that's one lesson. Microsoft, litigation for 10 years, nothing really happened. And I don't think anything's going to happen much to the existing quasi-monopolies that we see out there. But what I do believe is what happened to the telecommunication system. Technology is changing. I think that's going to be a big source of disintermediation and disruption to even those companies. We're seeing a lot with blockchain technology. We're seeing, the idea of I'm going to own my data and I'm going to own my identity. NFTs being a very good example of that, and they're mushrooming. It's unbelievable how quickly this is happening, and that's because I think individuals want to control their destiny and really not have other entities defining who they are. So already the technology is changing. And of course, we still have television advertising. It has just started moving down after all these years when it's been losing audience. So still Facebook and Google and the others will enjoy good years of growth, but the technology shift underway is, unless they somehow embrace it, is going to disintermediate them and disrupt them longer term. In terms of future, I think that when we talk about transportation, so autonomous taxi networks will submit to natural geographic monopolies. And it's because of artificial intelligence. The companies with the largest amounts of high quality data, providing the biggest numbers of corner cases or edge cases, and the best AI expertise are going to win in a number of markets. One of the most important ones is transportation. Because, and you know, our bet here is Tesla is probably in the pole position in the United States, perhaps not in other parts of the world. Well, what is this going to do in terms of for the good of society? In the United States, there are about 35 to 40,000 accidents, fatalities in car accidents per year. I always divide by 10, so I'd presume maybe 3,000 to 5,000 in Canada, but 1.25 million fatalities, car fatalities around the world. And data talks, and regulators are beginning to understand that 90% of those fatalities are caused by human error. So artificial intelligence, and as I mentioned before, you set the objective and the reward system, machines, robots are going to prevent the majority of those. And it's already evident in some of the autopilot safety data. So I think this is unstoppable because it will solve such an important problem, save lives. And the data are there to support the use case, and regulators in this case, we are happy to say, are very data driven. I think regulators over time, because again, artificial intelligence, we have the data, we have the computing power to understand the data, we have the storage and so forth. I think that regulators will understand that most of these ecosystems are going to result in something better than what otherwise would have been the case. The same is true with the genomic revolution. There are going to be a few companies who understand exactly what has mutated in our genomes and what are the best therapies and how our bodies are setting up and how to prevent disease. I think that's going to be a winner take most. But again, think about that. That's all about saving human lives or extending human lives.
Right. Yeah, I like that. I think the idea that disruption is a continuous game, and governance really can't keep up. They've demonstrated that. As one of the innovators, Fay, you know, your background is in telephony, and now you have your business runs a hybrid edge cloud that in important ways creates, as Cathie was talking about, a disruption in essence of how systems communicate and ecosystems communicate. As an innovator, as a CEO of a successful startup, how do you see the investment ecosystem supporting entrepreneurs who are part of this continuous disruption cycle? How do you see the investment economy sort of supporting your growth and your peers who are trying to do similar kinds of disruption?
Yeah, I think entrepreneurs are having a tough time. There are two groups of entrepreneurs. Those are kind of repeating the past app economy and the same advertisement model economy. And those are the ones that actually successfully raising investment from the traditional VC. Then you have a group of entrepreneurs that they really thinking disruption, they really thinking platform, they really thinking systematic technology change. Like when you look at Mimik as a hybrid edge cloud platform, we're a platform, we're not an application. And when we go in for the fundraising, people even have a tough time understanding what we do, and they want us to shorten it to 6 bullets, the famous elevator pitch. And a lot of companies that are in the same sector, obviously I'm talking to a lot of entrepreneurs that they really want to make substantial changes, they're having tough time to raise money. They're having tough time to talk to the VC the language that they actually understand. So I'm sure, and there are discussions, there are work in making around how to even disrupt investment into startup companies. You know, so kind of create a decentralized investment model that can help entrepreneurs to continue innovate. In a disruptive model, in a foundational model, and not be bound between the politics of VCs and the politics of government. Because that's also two things that I think entrepreneurs are reaching a level. I mean, if I say something wrong that VCs don't like, or if I say something wrong that government don't like, where do I go and raise money? So what happens in that case? What happens to innovation? What happens to disruptions? What happens? That's where to me, that's where the challenge starts, especially when I talk about monopoly. So, but again, companies like us, they continue on. They don't give up. They find people like Cathy and other investors that invested in Mimic and all that. And over time, people will see and understand, and that's when the mass investment starts. I mean, if you think about the first generation of internet companies, Google of the world, right? They were the ones, a small investment in those companies, and their success made Silicon Valley VC market, right? Because then they followed. But at this stage, the companies that are kind of taking a foundational approach to making drastic change are those first generation that probably are going to have more sweat and blood and tears shed until others understand it and get it and follow it, right? That's where I see the role of government, actually. I think if government has one major role, which, by the way, COVID kind of shed light on governments around the world on how they dealt with this chaotic situation. And unfortunately, I yet to see a government of any countries that managed to manage that successfully on time, strategically, like kind of long-term strategic plan with short-term tactical steps. But to me, that's where government could play a huge role in how to help and fund startups, smaller companies that has foundational technology that changes the future of the digital economy. But what I also see within those government bodies and a lot of fundings that become available is that they kind of trying to follow the VC model. So they kind of look at the model and they say, oh, VCs are investing in this, so let me fund companies that are in that sector as well. So you don't see substantial amount of also investment from any of the governments. I mean, not many of them, that they're not also focused on empowering these type of startups, these type of innovations that are kind of have a future outlook and how it could impact the future of society as a whole.
Yeah, I absolutely. I think that Cathy, you know a thing or two about disrupting investment models, and I have two questions, which that sincerely trouble me. The first is, why do you not see more investors following your lead? Everyone prides themselves on data centricity, on looking at the facts. There's a staggering and mounting body of evidence that you've been right again and again, and there doesn't seem to be as much adoption. And the second part to my question, because it relates to what Fay was talking about, is how do you think that applies to startup investment, to VC investment? Are there similar disruptions that you see happening in that space?
Okay, one of the reasons, what I'm about to say will sound somewhat ironic. I think the reasons there have been a lot of naysayers around our strategy is because of the tech and telecom bust after the internet bubble and the 08-09 meltdown. So those who were naysayers during the run-up to those two periods, they ended up being rewarded handsomely for naysaying. And so the risk aversion that evolved after those two crashes dominated the business, absolutely dominated the business. And so we had a shift towards passive and index-based strategies, which are all backwards looking, and a focus on the short term. I want my profits now. I want my dividends now. And I don't want you to invest in whatever you're talking about right now, because that's too risky and it's too volatile. So I think it is. And by the way, I am actually happy as a portfolio manager that there is so much skepticism out there, because what it tells me is, first of all, the fact that the seeds for what is happening today were planted during the 20 years ended from 1980 to 2000 and have been gestating all these years. It means we're going to see explosive growth. And just think about the difference between now and the tech and telecom bubble. Investors and speculators were racing, into strategies like ours back then. And now all we get are questions about the risks we're taking. That is a really nice tension from a portfolio management point of view, to be the backdrop. But I think with time and hopefully with our education, because we give our research away, not when it's finished, we give it away as it's evolving. We want investors and others to join us on this journey and to teach their children and grandchildren, about the kinds of education they'll need to get on the right side of change and to avoid being disrupted or disintermediated. So I think the seeds being planted 20, 25 years ago in the stock market, whenever there's a long base, and in this case, say it's 25 years, the breakouts can be explosive. And I think this one will be, because what is happening is these 5 platforms that I mentioned earlier, which involve 14 different technologies, all are evolving at the same time, and they're converging. They're converging. So the growth characteristics we're going to experience will be on the order of nothing we have seen before. And we're out there trying to educate, and we get converts a few at a time. And I especially like the converts when we're in down periods for our strategies, because that's the way you can make real money.
And the convergence of these technologies, I think, is the first time that we're experiencing this convergence. I mean, mobile internet, what we're saying is that mobile internet was just a tip of iceberg.
Yes.
It was something for us to play with, right, and see where the market is heading. We never experienced this flux of, all these trends coming together at the same time with such high speed. Just like what Cathy mentioned, when I realized that I started this company pretty much in 2009, 3 years after Amazon Web Services was launched. And at that time, when I look at the traffic pattern, I said, cloud is not going to escape, and data privacy is going to be issue. So it went to stealth mode, and then a few years later, we went to VCs and we said, cloud is not going to escape. It's going to be expensive. Bandwidth is going to be expensive. Energy is going to be an issue. Data privacy is going to be an issue. And they all laughed at us. Like, what are you talking about? None of this is going to happen. And this is right now, all of them are coming together and happening at the same time with the speed of light. Like, as a person that is a technologist and I've always been ahead of market, I find myself not being able to catch up right now. And that's the important thing. And that's why it's important to also create digital inclusion. When we talk about data, and data is mine, because and what we said at the beginning, that this is the era. So if you think about mobile internet, disintermediated the physical middleman. Then it was replaced with digital middleman. What I see and what I hope that we have an impact on and build the next generation of hyper-connected world, it doesn't have digital middleman anymore. It's about producer and consumer. And data as a currency, my data as my currency, my asset, my digital asset, is actually need to be a source of income for me. Otherwise, we're going to have a tremendous inequality in wealth, and we won't be able to afford any digital solution to begin with, right? Which actually is anti-growth by itself. That's why it's so important to create this digital ecosystem. And even us as a small company, we're supporting many other startups. We're calling it like a Mimik X accelerator, so that we can help them, that they can build their solution in a more scalable, flexible way with full data privacy built into it.
Great. I see we have 5 minutes left. I'm getting some questions from the audience, so I want to try to roll those in here. I'm gonna bundle 2. One is around implementation. Cathy, you talk about your 14 different areas of research, and the question is, how do we accelerate implementation of those ideas? Obviously, it's the investment ecosystem again that's part of it, but the question is, how do we accelerate it? And then the flip side of that is someone's asking, shouldn't we wait until the risk is lower? So this is exactly maybe against your investment thesis, is in these moments of crisis, I think people do naturally get concerned about the future, and you're in more of a defensive crouch. So I just like you to speak to those 2 things: as A, implementation, how do we back the doers? How do we back the people who are taking action, like Fay and Mimik? But then also, how do we make the people who are risk intolerant be part of the game? Because we're all moving together, aren't we?
Yes. Well, in terms of implementation, yes, it has been very interesting watching Fay's and Mimik's journey. Fay saw the future well before others did, and I think because she wasn't presenting VCs with this this tidy app which would go viral in 2 minutes and lead to outsized returns. She was basically doing the heavy lifting of making one-to-one happen. And I've seen this in the drone and any fixed asset space. We're seeing the same response. I think now that the digital and the physical worlds are coming together, the VCs are going to miss out if they do not invest in these sorts of companies. And so it is why we are looking to invest in them. And you'll notice a lot have started to move through the SPAC vehicle. And the reason is the VCs just didn't want to have a model that wasn't familiar to them. There were so many of these apps over the years that led to riches beyond anyone's imaginations, that this just seems like hard work. But sometimes hard work, just like I mentioned, the gestation over these 25 years, sometimes a lot of hard work leads to explosive returns. And I would expect this movement, or the convergence of the physical and the digital, the more tightly intertwined, to be just that. As far as waiting, well, my philosophy when it comes to investing, period, is to diversify. And so if your strategies, your portfolio is focused primarily on index funds, and if I were to tell you, look, this period of disruptive innovation is upon us and is going to accelerate and be beyond belief, beyond real belief. Even if you don't believe me now, you should hedge your portfolios at least with 5%, just in case your portfolio is being populated increasingly by value traps. Cheap for a reason, because they're going to be disintermediated or even destroyed. A lot of people think the safety resides in the indexes. If we're right on what's happening with innovation right now, the indexes are going to be probably the riskiest places to invest. So I like to turn that idea or notion of risk a little bit on its head in that answer.
Yeah, I think that's right. There's another David Goliath question, and this one's for you, Fay, and that is, do you think that hybrid edge can compete with the Goliaths in the space that, you talked about digital middlemen, and there are several, and how do you see the hybrid edge cloud competing with, or collaborating with, or reinforcing the growth of this digital infrastructure that has really dominated a lot of the economy in the past 10 or 15 years?
Actually, cloud providers, if we're talking about Galila as a cloud providers, even cloud providers embracing edge, but they're embracing it with more traffic goes to my cloud versus a more neutral horizontal thing, and the way that we see edge and cloud that will always coexist is almost like Wi-Fi and cellular, type of a model, except that today When you are on Wi-Fi and you don't have an actual internet backbone, your application doesn't work on your phone. You have to go to your setting, you have to turn off your Wi-Fi, so now your application can use cellular data to communicate with its backend. So that's why we call it hybrid edge cloud. And the way we built it is that the two will always coexist, but it's a matter of where the data journey starts and where the data need to land, the knowledge need to land, then data. So where the data starts on the source, you have enough power on your phone, on your Android, on your iPhone, on the robot in a manufacturing. There is enough power that can process data, process task, translate to knowledge, and now that knowledge can be exchanged to other devices or on the same device. You know, today you have two applications on the same device, a lot of payment related application. Your healthcare application needs to make a payment using your bank application. Your bank application is on your device as well, but the way it operates, the data need to leave your phone, goes hundreds and thousands of miles away from the phone to cloud. The backend of one app need to communicate with the backend of bank app in order for the two applications to now get authorization to communicate with each other. With Mimic, what we have done is that utilizing a standard OAuth 2.0 with the Mimic technology, one application can get authorization from another application on the same device. So what you are going to see and what we expect to see is the same cloud-enabled SaaS model that almost now becoming on device. So you're not going to have a bank application, you're going to have a financial transaction as a service, because every data stream will have a financial transaction associated with it. So to me, these things will always coexist. I mean, it's not something that you can stop. A lot of cloud providers are embracing it. We have both Amazon and IBM as the two of the cloud providers, both partner with us and embrace us, and we do a lot of co-development, co-marketing, co-customer success, because hyper-connected world by orders of magnitude is going to be larger than mobile internet, and it's going to be bigger than any single entity that want to own it by its own. There will be a try. There is definitely try on that direction, and if we don't do anything about it, there will be. But we believe, and what we're seeing right now with the ecosystem, is that that's a direction. They both always coexist. For cloud providers, the cost of building real estate, Gartner a while ago said that only 20% of industry have gone through their digital and cloud journey. 80% are just starting. So if you look at someone like Amazon that owns 50% of the cloud revenue today, how many data center do they have to build in order to be the 50% of the next 80% of the market? Cost of real estate, cost of bandwidth, cost of powering it up, all that is basically issue. Latency, all that is going to be issue. So that's why they also coming from cloud down to the edge. What we did, we kind of predicted again this evolution, and we went from edge up to the cloud. So we kind of said the first device that has compute and the data source starts is your edge, and now from there, based on the application logic, based on where the knowledge need to go. Sometimes knowledge has to go on the same device. Sometimes has to go on another device. Your thermostat and your solar panel need to be able to communicate with each other, regardless of who the vendor is, regardless of who provider of the solution is. So that's why edge is such an important element. And I want to just touch on another thing about NFT and blockchain. We're seeing NFT in art sector basically growing very rapidly. But what we are going to see, and what we, at least on my side, I'm hoping to see, that NFT can be attached to every line of code. So when a developer develops a line of code and put it on the open source community, and someone else is training that to train an AI to how to code, that developer need to get something in return of that. That becomes a source of income of the future of developer. So that's where I see the sustainable digital economy, that everybody, including a consumer, as a data producer in that economy, has a return on that, has an income coming to it. And that's why I think it is a David and Goliath. but at the same time, it's a collaborative ecosystem that is forming and hopefully is going to shape in that direction.
Great. I'm going to ask a question that a question of personal privilege here as moderator, and the themes that you touched on, Fay, are very close to my heart, as you know. My question is, and Cathy, I'll address this to you. The theme of the physical world and the digital world coming together. You know, we talk about it in really important economic sectors like robotics, but also one challenge that we're looking at is that more than 3 billion people on the planet are simply not a part of this digital economy at all. And so that type of inclusion, you know, this is a little bit trite, but I'm curious to get your take on it. If we could get smartphones or digital devices in the hands of 3 billion people, how might we do it in a way that would have the transformative potential that you talk about in the curves of Venmo and PayPal and some of these other investments that have happened?
We believe those two are mobile connectivity for the 3 billion people who have no access to broadband. Now, the hardware out there has been commoditized. China and India are selling phones for, you know, $20 or whatever. But the broadband access has not been there. Well, Starlink, thanks to SpaceX, Elon Musk, is the answer to that. And we believe that's a $40 billion revenue opportunity per year. Believe it or not, 40 million people in the United States do not have broadband access, or it's very spotty if they have it. So it's in the US, even with a population close to 350 million, more than 10%. But then that 3 billion of people in the rest of the world, I think that Elon is passionate about getting them access. And I think there will be governments who will enable it. So it'll be a private public partnership. It's been very interesting to watch SpaceX and NASA work together as well. So that's one thing. The other, just as a side effect, this would be more for the higher income part of the spectrum. We think the other massive opportunity, it'll be a $270 billion revenue opportunity per year, is hypersonic flight. So going from JFK to Sydney in 2 to 3 hours instead of 15 to 17 hours. So just by the by, we're getting both ends of the spectrum with space exploration.
Yeah, digital inclusion is definitely one of the musts. You know, again, it goes back to also, if we don't, because especially with advertisement model, at the end of the day, we're reaching a capacity of how many users can we acquire with that model. And that's why digital inclusion and bringing the underserved community to digital is also a new source of revenue and education, and bringing them to the community. Otherwise, we're going to end up in digital ghettos.
That's right. Well, I think we have to leave it there. The session is up. I'm really grateful to both of you. I'm excited for the optimism. I think with minds like yours focused on these problems, we do have a better future to look forward to. Thank you both.
Thank you.
Thank you so much.
Thank you, Cathy and Kelly. Thank you. Bye.